everyone. Okay, it gives me, another big delight to welcome you all back again. And this time it's one of our favorite companies, and very thankful to the management of Northern Capital to agree, to become our teacher today, guru today, to help us understand, the nitty-gritties of the company. Uh, First of all, Ashish ji, बहुत बहुत धन्यवाद आपका. Thank you so much for coming. Joined by Aazeb from our research team and our dear friend Digant Bhai, who has been teaching us about NBFCs for the longest of the times. Sorry, before I start, disclaimer first that as Omkara Capital has boring fund as well, we are investors in Northern Arc Capital for the long term. So I personally hold shares in Northern Arc Capital. Our fund also owns, and we have also advised, about Northern Arc to our clients. But the idea of this, interaction only remains that we want to understand more and more about the DNA of the management, about the strategy of the company going ahead. This is not a serial where you see and we are advising you to buy or sell or trade in the stock particularly. Thank you once again, everyone, for joining this.
Thank you very much. Delighted to be talking to you and talking to hopefully hundreds and thousands of people who will listen to it.
Lovely sir, मजा आने वाला है सर. I can promise you आज मजा आने वाला है, ठीक है ना सर. I always say कि हम इस सीरीज को इतना सिंपल बनाना चाहते हैं कि मेरी मम्मी भी जब देखेगी तो बोलेगी मुझे पता चलेगा कि नॉर्दर्न आर्क है क्या, ठीक है ना. So if you can, if possible, please हिंदी, इंग्लिश जैसे भी आपका मन करे यूज कीजिए. And I've requested Digant and Aazeb also jump in wherever you want to jump. Make it very simple, conversational tone kind of a discussion. Sir, before we start, we always think that the promoters are the most important thing, when we invest in the company, and it goes without saying. Okay. So before we jump to the business, which Digant Bhai and Aazeb are the experts, help us to understand what is Northern Arc Capital. इंडिया में सबको NBFC लगता है सब सेम है, ये भी सेम है, वो भी सेम है, वो भी सेम है. Northern Arc कैसे बना था? Why it is what it is, different from say Bajaj Finance or many other NBFCs in Indian markets. So what is Northern Arc?
I think it's important. First, thank you for inviting me and giving me chance to speak about Northern Arc. And thank you for your patience, I guess, for the time we will spend together today. I'll make it as simple as possible, but more importantly, also try and bring some bit of nuance of what we do for the listeners of this podcast. The genesis of Northern Arc goes to a classroom, correct? And in classroom, 15, 16 years ago, it's no different than the India story for last decade and a half. And that is essentially nothing out but a culmination of resilient rural economy, finding growth in the consumption, growth in industrial, growth in services, and the overall growth in the India GDP, which is growing at like 2.5 times of the world GDP growth rate at 6.5%, 7%. Correct? I think that's the range. To make that happen, in the classroom, the debate was saying, how do we ensure that people who don't have access to money get access to money? A very simple concept saying, how do we get people to get access to money? A formal source of money which can be delivered to them in ethical, responsible, and in a manner which is seamless and compliant to the laws of the land. And for that to happen, you need to go to people who have money, correct? So essentially, Northern Arc is enabling the flow of money from people who have to people who need. And that's exactly what name stands from, Northern Arc, which refers to the old trade route which connected west to east. And that's exactly how we did. And the journey began 16 years ago when Nachiket More, I think we got the first part of the soft capital as form of debt from ICICI CSR fund, which was duly returned. And then we had multiple other impact investor like Leapfrog, Axion, who came on board, correct? And subsequent to which a lot more investor came on board, and then we got listed last year. So thesis was saying we looked at one sector in about 16 years ago, which was rural finance, which is what today we popularly call it as microfinance, and says there are smaller entities. India is a large country, geographically little bit complex, each state, different language, different piece. There is a lot more hyper local solution which needs to be provided to address the needs of people. And the people who are doing that access are not necessarily large bank, but a smaller companies, what you call as microfinance institutions or NBFCs, MFIs, and saying, how do we provide them access to capital? By using the financial product knowledge, which is essentially structured finance, solution, guarantee, construct. So build a bunch of product where the investors feel compelled and feel very comfortable to deploy monies there. With that, we build series of domain expertise over a period of decade and a half. And we started with, so we looked at the person in the village saying he or she needs a short-term credit. You give them 30, 40,000 rupees, and you look at the performance of that data across the cycle of that customers. Then we said there is a small trader who needs access to money. Then came the funding to the small businesses. They all need some mobility, some vehicle finance, auto finance. We developed as a sectoral expertise. Then we said affordable housing is a much need of an hour. We opened sectoral expertise and affordable housing companies. Then we looked at agricultural supply chain, consumer, climate, in that order. We then, over a period of time, developed deep domain expertise. Fair to say, anywhere between, in these sectors, 2 to 6% of the NBFC credit flew through our pipe. And business over a period of time evolved from just, in the year one itself, from just being a transaction solution provider or enabler of that flow of money to someone who enabled that flow of money with skin in the game. And that's how you raise the economic capital, with a bunch of shareholders coming in. Before we went public, IFC came in and invested in us. So it shows that what we do genuinely measure. And to put it in very simple perspective, Northern Arc is that Sutradhaar which connected domestic large banks, global institutions, global multilaterals, domestic multilaterals, to the smaller entities who are operating in the deeper states in India, to enable the flow of money to these 7 sectors where we work with. I think through the life, we've done over 2.2 trillion INR of financing, impacted over 120 million lives. And that's very important for us when we look at it. And by doing so, we would have had over 46, close to 50 million time series of loan performance data. So when I said, when we lend the first time, we looked at the performance of that person on the first time, then it came through second time, the third time. So I think that's how the risk model also evolved. So when I keep on saying, in what we do is a combination of data, combination of the work we do in the field surveillance, combination of work we do when we build our scorecards, test our scorecards. And I think that's exactly what Northern Arc is all about. So Northern Arc is using its knowledge over a period of time, evolved into a diversified financial services company. Runs a two-pronged of business. One is a credit solution business where we work with 350 to 400 other originating partners or other smaller entities, using the same knowledge what I spoke about, of because we understand the end customer, we understand the end customer credit needs, we understand the end customer's risk profiling, we understand the outcome of the risk we take with the end customer, and how do we enable the flow of money. And we can do that either by supporting that company from our balance sheet. We have our performing credit funds, which is now 9th year in running. We've deployed over $1.5 billion. Our performing credit funds have given a gross yield of almost 14.25% to 14.5%. We've deployed 12 funds, 6 of them have closed, where we've returned the economic capital. Then we build a series of expertise around. We build a retail platform to democratize the bonds on our platform to get the retail customers to start earning those high-yield bonds in a very responsible manner. That's a separate company called Northern Arc Securities. The platform is called Altify. And we build the full expertise from origination to collection to recovery to institutional investors to domestic investors. I think that's part of it. Then 6 years ago, we also said, listen, now we have so much of knowledge and data. We should also try and find 3 interesting segments where we can ourselves help addressing the needs which is not being addressed by other companies. So we looked at MSME, which we believe is a very large part, grossly underserved. 30% of GDP comes from MSME sectors. We all know 55% of them don't have access to formal credit. Saying, how do we create secured products in a very phygital way to enable that flow of money to lend also directly to these customers? The second sector, which is essentially consumer, you need to create convenient. We are a consumption-led economy. 64% of our GDP is bought from consumption. Saying, how do we create digitally simplified product which can then be accessed by customers both directly and working in tandem with other partners? And that's a large part of our lending business. And the third is the rural finance, which is where we started in journey with. So we lend directly in these three segments, and we do a very broad spectrum of a credit solution business, which is a combination of getting early stage with companies, getting deep, understanding the risk profile, providing the right set of solution, getting a large fee income from doing the placement of providing credit solution to them. We have almost 15% of India's securitization market share. Our originating partner does almost 30%, over 35% of India's securitizations happen through people we work with. So we are a meaningful contributor or a Sutradhaar in growth of all of these companies. And as you do what you do, a lot of our originating partners have hit markets or are hitting markets, and they will then vouch saying Northern Arc walked the journey with them over the last decade and a half, because we get in early, we partner. Our success is depending on they taking the right credit calls and running the company with the highest level of governance. And that's very important for us. And that's why if you look at in a placement business, 80% of institutional investors who take credit solution, who invest in papers which we represent our clients for, continues to buy from us because it has passed through Northern Arc's risk filters. I think that's the quality of franchise, whether to do with lending, whether to do with investing, whether to do with placement. We follow the same principles on risk first, and look at the risk on a first principle basis, saying, is it good for us? And very different thing, will I allow my mother to invest in it? And I think that's exactly what we do.
I think Ashish ji, you summarized the Northern Arc business very beautifully. Just want to break it down into 3-4 smaller questions. So in India they say there are some 9,000 NBFCs which RBI has given the license, but banks actually end up lending only to the top 100 NBFCs. They hardly care to go down. And guys like you, Northern Arc is the one who has taken the pains of going to the next 300, not the top 100 but the next 300. And you guys have taken the risk, got them the capital, and now since they grow, others also want to lend to them. So this, where does this vision? I believe that we started this when microfinance sector was in pain after 2012. Nobody was willing to look at it, but we looked at it. We really scaled up along with the sector. Then in 2016 we did the same with consumer fintech NBFCs also. So what is in our DNA, or what infrastructure do you have that gives you this domain knowledge? Like, do you have credit analysts? Do you have people who scan those next 400 500 NBFCs very well? And how do you monitor these loans? If you can just deep dive into this first part of your business.
No, sure. This is interesting. And I think to articulate it, let's just look at the journey of India and look at what we do. To what I said is it's a journey of evolution, correct? That person in the village who's raising first time to borrow money to buy a kettle for milk to create some income, correct? So that's a productive use of microfinance money. And then you goes to the next cycle that you want to take a second cow or a second buffalo, and then you want to set up a small store to sell household goods, or to sell kirana, or to then you go and say, listen, I need to also put money for my kids' education. I want to make a house. And that's our journey. Our journey begins with the customer and begins with the risk policy, or what we call in marketing terms, target client model of the company we work with. We get onto companies at a very, very early stage. We look at saying, what is the promoter's profile? get in early before the cap table formation stage. Look at what's the risk policy they have, and how do they bring that risk policy into work. So I'm going to now do two parts of it. So when you looked at the risk policy, you've gone to the entity at the early stage, you put very small quantum of money, and that gives you access to see how that policy is coming into play. It's no different than the way you look at the business when you invest in us and you look at our quarterly performance. You look at look at our key indicators and see whether it's going in the right direction, which is in line with your investment thesis or not. And that's exactly how we look at it, saying we got into you, we had this conversation with you, we looked at their risk profile, how that risk profile is working. And the risk profile working, the best test or the acid test is, how do you attract customers? How do you connect with your customers? How do you underwrite your customers? How do you fulfill the requirement of your customers? And how you deepen relationship? That's a cycle: attract, connect, engage, fulfill, deepen. And since our portfolio now is spread out almost 680 districts, we have a large team of independent risk officers who cover 250 districts physically. And we test this thesis on the ground, in the villages, in the small cities, not in the district headquarters or metropolitan or sitting in office, but really on the field. And then you connect these dots and you revalidate these dots by going and talking to some good customers, some not so good customers. And so as a consequence of that, Northern Arc tends to get early signs if there is a signs of stress, because you have high quality data analytics, you do quarterly bureau refresh of data, you have touch and feel of what's happening in the ground. You know how, from what I am telling you to what you get to see when you meet my customers, is the best estimate for you to evaluate how the risk is behaving. And I think that's exactly how we went about building domain expertise in these 5-6 sectors where we operate. And using that expertise, 6-7 years ago, we said we should also start providing solution to the 3 segments we've identified: consumer, MSME, and rural. That's where it is. And the journey is long. So when I take the first risk, I give you first money, and I track the performance of that pool of money. I do the same thing with the second tranche of money, which I give to the entities. Then, because I build the full gamut of credit solution business, then we say, listen, there is other domestic lenders who might want to come and participate. And that's what a placement business is about. And we say, listen, what you're doing, it's of value to some global impact investors. How do we bring that impact investors to you for you to get access to long-term credit capital?
Just before you go to this placement business, एक बार मैं summarize कर लेता हूँ खाली जो हमने बोला. So Varinder and Aazeb, if what I understand what Ashish ji is saying के ये Northern Arc एक large NBFC है जो बहुत सारी छोटी NBFCs को lend करती है, और वो lend करने के लिए they have a group of solid team जो on ground क्या हो रहा है वो track करते हैं. वो लोग basically micro finance, SME, affordable housing, ये सब की जो छोटी छोटी NBFCs है उनको वो लोग लेंड करते हैं, और वो क्या कर रहे हैं वो भी वो लोग मॉनिटर करते हैं. सो लाइक दे आर ओरिजिनेटिंग, मतलब वो बहुत सारी एनबीएफसी से टच में है, उनको इवेल्युएट करते हैं, अच्छे लगते हैं, वहां लोन देते हैं, एंड दैट इज हाउ दे earn their basic money. Like they borrow money, Northern Arc borrows money from banks say at 8.5-9%, और वो लोग इनको 12-13% पे लोन्स देते हैं. ये एकदम प्राइमरी बिजनेस था. अभी आशीष जी एक प्लेसमेंट बिजनेस की बात कर रहे कि मान लो हमारे पास इतनी सारी एनबीएफसी आ गई है कि हमको सारी की सारी हमारी बैलेंस शीट से नहीं करनी है, तो हम क्या करते हैं? तो आशीष जी, यू कैन प्लीज, if this is correct interpretation, you can go ahead and
I think somewhat, but let me try and also simplify. So we take small risk and we partner with you for a long period of time with other NBFCs, fintech firms, and then also open doors for other lenders to come on board. Correct? That's the one part of it. The second, if we genuinely like what you're doing and that has a real impact and it's aligned with the thematic opportunity of a funds business, then a funds business can also invest on it on an independent basis. Correct? But the knowledge, repository, risk principle all remain the same. And if we like what we've invested in, we also make it available for the retail investors to participate in it. I think that's the core of it. So basically, Northern Arc, fair to say, among 9,000 NBFCs you spoke of, has been a true Sutradhaar to enable the flow of money from large banks, large global institutions, large domestic multilateral institutions to smaller companies, and tracking it, the benefit of that to the end customer, whether it's a small business, whether it's for vehicle finance, whether it is for affordable housing finance, any of that. For that, we use both our product knowledge. So one point is there are a lot of larger NBFC, even larger than us, who needs our solution to do securitization, correct? How do I create more capital efficient structure for the larger companies to have access to liquidity, correct? So I think all of that expertise is very unique as a true Sutradhar of enabling the flow of money, and have competencies which is unparalleled to no other company in India, correct? 15 years of lending track record with GNPA sub 1.2%, net credit cost less than 100 basis point. You look at 9 years of fund management, performing credit. Now I know performing credit today has become a very fashionable fund, but we have a 9-year track record. We've deployed over $1.5 billion, successfully returned, doing a lot more funds now. 14 years of institutional placement experience, 3.5 years of bonds platform experience. So nobody has these capabilities, and all of them essentially focus towards the end retail customers. All of this is only done to retail customers, whether their need is to have a motorcycle, whether the need is to make the house, whether the need is for their business, whether the need is for agricultural supply. The need of the retail customers remains. So end of the day, in retail credit, across, irrespective of the product being used, we fair to say we are very customer centric and a product agnostic, correct? And use those principles to offer that full solution to which nobody else has these capabilities.
Sir, I always get 2 or 3 questions when I talk about Northern Arc to my investors, okay, that why is Northern Arc able to do what they're doing and no one else, okay, in India? And second is that, they work with a lot of fintech companies. So is that a fair, dealing with a lot of fintech NBFCs at all?
No. Okay, so I think we work with almost 350 to 400 other non-bank finance companies, correct? It's no different than if you look at banks work with 100 plus non-bank finance companies. So we, in the evolution process, we get early, and after a period of time, when they grow and the banks provide access to them, then we have more fee income. But I'm sure there are other people who want to do the same. We actually copied the placement business. Most of the banks have a large DCM desk, what's known as debt capital market desk. We run our own placement business very similar to them. We have a funds business. So we use that knowledge essentially. Think of Amazon. One of the big revenue line of Amazon is AWS. One of our few what risk principle we apply on the evaluating of the underlying retail loan book is used by institutional investors when they invest in or lend money to our originating partners. It's the same principle used by when the funds business invest in the thematic opportunities. It's the same principle when the retail investor buys a bond on Altifee platform. It's the same technology which some of the other banks are now beginning to use to lend to the end customers. It's a similar scorecards, what we build over a period of 15 years, which some of the other institutions use to underwrite risk. So everything what we've done, we are now in a process of monetizing all of it, keeping it simple. Credit Solution is one business which has a unique net interest margin plus a very powerful fee franchise. And then you have a direct lending business which is focused on lending to consumers, to small businesses and rural India.
Wow, you honestly, you make sound the NBFC business as simple, and because if we talk to many other people, they always make us worried. But the way you have done, is phenomenal. Okay, in this sector, like I never seen someone talking about कि 10-15 साल से आपके निम्स भी बढ़े जा रहे हैं, credit cost भी कम है, asset quality भी control में है और growth भी आ रहा है. All those things you are doing it very beautifully and consistently.
I have one question on your placement business. Do you have any kind of surety for that?
Huh?
No FLDG on that part.
No.
Okay.
So, okay, I think we should spend 1 minute on it.
Huh.
When I say we have skin in the game, and it's very important skin in the game,
Right.
we work with people, 350 plus other lenders who are operating, addressing the retail credit need using any of the product in any of the segment or sector, whatever word you want to know. End of the day, retail customer needs are same. I need a short-term money. I need money for my business. I need money to build my house. I need money to buy a motorcycle or some bit of finance. I need money for sowing my seeds. To all of that. Correct. Those risk principles remains the same, and we track performance of those companies very closely. 280 districts, 240 districts we physically cover. So we use our risk principles and make that pool of credit available for other investors. It is their choice to invest in that pool or not invest in that pool. Given that it passes through Northern Arc principle, the other lenders have a lot more comfort. I'm not a broker. I'm not a arranger. I will only represent a company on which I have an exposure, and I'm tracking their performance. And my tracking of performance is very different than the quarterly tracking which somebody else says, because I look at how they're originating, underwriting, fulfilling the real credit. I do quarterly refresh, all of that stuff. So it's a pretty comprehensive approach, and that gives investors, both domestic institutions, global multilaterals, domestic multilaterals who invest in these papers, because it's come through Northern Arc pipe. Northern Arc is tracking the risk, and that's the power of it. And that also, when we work with the institution, the originator sees that the Northern Arc punches a lot more weight. From my balance sheet, I can only do little. But when you add all of this between balance sheet, placement, funds, bonds, there is there is a lot more which Northern Arc can do, which an individual other institution may not be able to do.
Right.
So Ashish ji, I'll just ask you in this way that let's say there is an NBFC, small NBFC. He says, "Okay, I want 100 crores," and if all your risk filters, all your credit filters, if they are passed, let's say you decide that okay, I will give you 100 crores. Is this right that maybe of that 100 crores, 20 crores you will keep it on your balance sheet, and the remaining 80 crores will be bought out from you by say other banks, other large NBFCs, or even mutual funds or AIF or PMS or investors like us? Is that a correct understanding of this
So
placement?
there are two parts to it. First, 100 is a large amount.
Yeah, just, let's say 100 rupees, sir. We'll just break it
Let's
into
take, yeah.
percentages.
So either when we originate. So let's try and look at it slightly different too. I come to a company and says, listen, you have so much of liquidity requirement. Your quality of book is this. We can only support you with 5%, 10% of your liquidity requirement. But I think looking at your book, I can provide a greater degree of solution. I'm putting $10 on the table, and let me help you raise another $30.
Okay.
Correct? Now, $10 on my table at some point in time, and it has to have its own maturity curve before I make it available to other institutional investors and to retail investors. So it's not that I've onboarded you or your NBFC and tomorrow morning I'll say, listen, I think this is a good paper, let's sell it. We like to see the performance. We like to see performance through the cycle before we start doing other things. I think that's where it is. And it's a process of evolution, correct? If you look at the rural customer, it's like unless your second or third cycle has happened, no larger NBFC is coming to lend to him or a bank ain't coming to him. Only if it graduate to a level that he'll get a vehicle finance loan from other large institution.
Got it, sir. And in this, how large can this business become? And see, because this is a very balance sheet like this business has a balance sheet heavy component and a balance sheet light component. Like the way just we investors think about it, but like how much fee fee income growth we have done phenomenal in the past. So how
I'll
can
tell
we?
you simple. We look at this business now as a credit solution business,
Correct.
correct? The credit solution business means when I'm working with other player, what level I'm able to provide. My balance sheet is on this is about 6,500 crores, but I will do a placement, actually non-balance sheet, not routing it through the balance sheet, but helping companies raise money through structured finance, through series of domestic, global multilaterals. Really, our interest is in their success, correct? Because I also have my own money in that company. So we'll do, my thesis is we should do 2.5 times. If I give you $10, I should be able to provide anywhere between 25 to $30 of credit solution. Correct?
Got it.
And the funds follows the thematic options, correct? The fund is thematic depending what's the fund you're running at that point of time. It's in line with the thematic opportunity for fund to invest in. So the balance sheet, if you do 6,000, then you will say, listen, I want to do 15,000 crores of placement business. The funds will do its own investments. And part of the 6,000 you'll make available to retail public.
Right.
Sir, one more question which I just wanted to take it out was the shareholding. There is no promoter of the company, okay?
Yeah.
In which a question keeps on coming to us again and again. Can you just please take a
So
minute?
there is no identifiable promoter. I think the good example is L&T. They can't be
Infosys, many.
hundreds of good examples.
Yeah.
Yeah, I think what really attract people to Northern Arc, just three things we must understand. There are very few companies who bring purpose to life, and Northern Arc is one such company. I started my career with Citi. I worked with them for almost 2 decades. I used to run the retail bank way back in 2015 for Citi in India. It's that you are genuinely impacting life of end customers, and we track that truest and how do we living up to our purpose in a commercially viable, scalable manner. I think that's the truth. So you're able to attract a very good quality of talent. Since you're born out of classroom, correct, there is a lot to learn. Our approach to credit as a Sutradhaar or whichever language you use, connecting, there is enough for you to do. So a talent finds it very exciting what you are doing and the impact you are creating. And third, it is the highest level of governance. Our chairman is P.S. Jayakumar. He used to be Citigroup senior. I used to be, first leader from a private sector to come to run a PSU bank, successfully created the merger of larger Bank of Baroda. So we have a very high quality board, very high on governance. We want to do what is right. And I think that's where it is, and that's in line with the purpose.
Lovely. Sir, Digant will have a lot of questions on the business more. Can you just share, a minute or 2 minutes on yourself as well, sir? A lot of people will want to know about you as well.
Yeah, sure. So I started my career in Citi. I worked for them for about 2 decades. Large part of my career in Citi is predominantly on the lending side. Fair to say, when the 2006 crisis began to happen, prior to that, I used to run the mortgage business for Citi in India. I was called to run all the lending businesses for Citibank in India. Went through the transformation of whatever had to be done in 2007-8, subsequent to run the distribution and then ran the retail bank for Citi. Then I went to run an insurance company called Bupa. That's where I learned how do you bring purpose to life. And when I was coming off, and the shareholders and we had a very interesting conversation of how can we reimagine Northern Arc. So this entire evolution from just connecting as an intermediate retail lender to the entire credit solution business and building direct to customer and all the capabilities, whether it's Altifee, which is the Northern Arc investment managers, a fixed income platform, building technology and capabilities to enable flow of credit is all being built out, and we're very excited to what's being done here. Now, you'll be surprised on any given day, Northern Arc on a direct basis underwrite 20 to 25,000 loans electronically, where the bunch of application comes from many places. We do real-time attestation, KYC of the customers, real-time hit bureaus, do all the pulls, run the credit engine, communicate with him, underwrite that risk, disperse money, take the repayment instruction, communicate with him. We build all of those technologies to make it happen. And some of those technologies, we think early signs we can even monetize.
Wow, 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 wow. Good, sir. Good. Very, very lovely to hear about.
Just a clarification, Ashish. Do you plan on monetizing any of your proprietary technologies?
I think we will, you need to, there is a deeper question, and I go back to Digant, please. The way we look at risk and the distribution of risk, given that we are sectorally diversified, is to look at it saying at no sector should have more than X amount of exposure. In no sector, no geography can have more than X percentage of exposure. No sector, no geography, no district can have amount of exposure, because we know a lot of times the credit cycles are led by either by the natural event or the events in the state. So we want to ensure the diversification at the core of Northern Arc when we do the real asset test remains. Now you build the core thesis of Northern Arc is an understanding of the retail customer needs and the retail customer's behavior across the product sets. So obviously we help, we have scorecards which some of the other NBFC or NBFC-MFIs are using, essentially helping them answer call neo score. 4 questions in lending. One is whom to lend. Second is how much to lend. Third is what price to lend. And if you do all of this, what will be the probability of default? So some of that we have begun to monetize. The entire on-lending and co-lending, which has now become a pretty big thing, our platform called NPOS, which today, like I was saying, do about 20 to 25,000 loans a day, actually has a capacity to do 4 loans per second. Obviously, some of the banks wants to do it. And that's also more driven by a risk diversification, which sector, which segment, how many customers. So we make that pipe available to other banks to participate in it, and we get some SaaS or some fee in it. Yeah, that we will continue to monetize whatever is it needs to be monetized, and that's unique. Listen, the credit gap is so much. There is enough for everyone in each of the sectors. So we're happy to share and help contribute in building to the best of our ability.
So, I have one question, like, in response to this Aazeb's question, and you mentioned that we do around 22,000 loans a day. I think this business was not there till say 2018-19, right? We developed this as an opportunity when we started the consumer NBFC lending. So if you can just tell us, like, how has been your experience? Like, I think a lot of these companies are fintechs who are originating so many loans, at least sourcing so many loans that they can't underwrite, and that is where we are coming into picture, right? If you can just explain the basic building blocks of this, like how this idea came, because this is your second business, right? Credit solutions is the first, this consumer lending, or what we say B2B2C, that
No, I think, look at it. I'd like to, Digant, this is a digital lending business.
right.
We started this business way back in 2018, correct?
Right.
Before this entire on-lending, co-lending, which has now become a fancy word in today's day and age, has happened.
You really started the real co-lending or co-origination long back.
Yeah.
Yeah. Yeah.
By the way, the first co-lending in India happened way back in late 80s and early 90s. It was and since I was part of that in some way in cleaning it up, it was HDFC in those days used to lend 5 lakh rupee of loans, and Citibank on top of it give loans up to 25 lakhs, and that was the first co-lending arrangement, if I get it right, in the retail space. But yeah, we started in 2018. We work with partners, correct? Now, let's go back to the solution. I'll give you small money. I help you raise more money. I will also invest in it. I'll make that product available for retail investors. I make the product available for institutional investors. Now you're getting 100 people coming through your door. Your risk appetite is only take 30 of them, correct? Or 40 of them, or 50 of them. I believe there is another 10, 15 of those customers which someone like me has a bigger risk appetite, and I'm happy to take that. I think that's where it is. And since you took the name of one of the most admired NBFC, Bajaj Finserv, they've done reverse. Now they set up the marketplace and other stuff, correct? So I think that's where we build in. It is not linked to only consumer. We can do this. We do this when somebody goes to goes to an IIT or HCL saying, "Listen, I'm going to start my course. I need money." And IIT pushes that application to us. We underwrite it and disburse money to that student, to the guy who's coming into, who wants to upskill himself. So we work with a bunch of partners, but it's all done digitally. And we build those capabilities and controls across the sectors. Obviously, with JAM, Jan-Dhan account and all of that entire trinity enabled the flow of it far more seamlessly than it was. Way back in 2006 and 7, I remember going to Korea, we were doing something there, and they used to then have a loan vending machine. You could put in your national ID, it'll go and access your income, it'll go and pull out the bureau, underwrite it, and you can draw down a small money upfront without having, that loan is immediately disbursed to you. So today, I think India, with the JAM Trinity, the entire fintech, we found efficiency. I think the fair to say, found efficient way to deliver small credit to customers, which larger institutions were not able to do because the operating cost did not justify them to do a 50,000 rupee loan. I think that's where, this access to credit has become. And we build these competencies across, you are a merchant or ONDC as a category. All of this you can do electronically. Now you have GST record here, Udyam Aadhaar, 6 crores Udyam registered MSMEs. So there's enough for all of us to do there.
Right. So, sir, this portfolio is 3,600 crores, right?
Over 4,000 crores, yeah.
Around 4,000
crores, yeah. It's
growing.
Okay.
And we work with around 30 or 35 partners. These partners would have somewhere been a part of our credit solutions business in the past as well, right?
We work with more than 35 partners. I think it's unfair to say because, a lot of time you will not say HCL as a partner.
Okay.
At the end of the day, feeding to us, they are all our partners. So we work with 50, 70 plus partners. In some of them who are financial institutions are part of our ecosystem for many years. And we truly invested in their success. I think fair to say, unlike other players, as a Sutradhaar, I'm very much, for me, the success of that fintech, the success of that NBFC is very important to us because I also have skin in the game and with them. And we shared a lot of time, knowledge, cohort performance, what we should do, how we should look at risk data, how the risk data is performing. End of the day, we both underwriting the similar set of customers.
Right. So वरिंदर जी एक बार खाली हाफ अ मिनट समराइज कर लेते हैं हम जो हुआ है अभी तक. So basically नॉर्दर्न आर्क, आशीष जी ने जैसे बताया, started as a credit solutions company, NBFC to NBFC lending. फिर धीरे धीरे उनके जो 300-400 NBFC पार्टनर्स थे उसमें इतना वॉल्यूम्स फ्लो होने लगा that they thought के हम ये जो डायरेक्ट लेंडिंग भी कर सकते हैं, which is what he said. अभी हम almost 22,000 लोन्स अ डे पे पहुंच गए and 4,000 crores का पोर्टफोलियो है. तो दैट इज अ सेकंड बिजनेस, और हम कह सकते हैं सेकंड फेज ऑफ नॉर्दर्न आर्क. एंड मे बी आशीष जी, वी स्टार्टेड द थर्ड फेज व्हिच वाज डायरेक्ट टू रिटेल, जहां हमने ब्रांचेस भी खोली, माइक्रो फाइनेंस, द रूरल business and the SME business which we did. So maybe if there's anything more you want to add on this, the second business, and then
same knowledge, which became phygital in nature, because you need that human interface for those kinds of loans, but they're fully digital capabilities for us. So we lend secured lending, what is popularly known as loan against property, against their house, business premises. We lend loans up to 50 lakh or so. We are a large, like I said, MSME is a very important spectrum for us where we operate. So we have about 70 plus branches where we lend to it. That business is done really well. So our MSME is almost 3,000 crores of our overall 14,000 crore of balance sheet. And then you have the rural finance, which we in a sense slowed down early 24 because we were seeing the signs of stress. But that has 300 branch network. And we are now seeing, like I said in the last quarter's earning call, we're now seeing the trajectory of it turning back. And we're seeing that the par zero accretion in that is broadly in line with what it was in late 23 and early 2004. So that means, that book we'll start building it back gradually.
Got it. So Ashish ji, this entire, I think it's only 5 years that we have started this whole direct to retail, the branch, the phygital model that you say, the physical plus digital, right?
Yeah,
So,
yeah.
so just wanted to know that, see, like microfinance, the sector itself was in turbulence, and with the sector, our provisions and everything also went up. So how would you summarize this 4 or 5 years of learning? Like, you would have envisaged that, okay, we should reach this level of this level of business, this level of profitability. Do you think we are on track, or are there some more learnings of this cycle that we may implement in the coming years? Any comments on this direct to retail? Because Ashish ji, generally market is very excited about this direct to retail part. The other businesses which are actually so unique, somehow the market is more excited about direct to retail.
No, I'll tell you honestly. If there is one thing which I say, repeat hundreds of times during the day in most of my meetings, and the word you've used is, what have we learned today? Look at it. If you've enabled 2.5 trillion of financing, Northern Arc should learn something from it, correct? Hundreds of loans passes through your pipe. You do 10-15,000 crores of securitization volume. You should learn from every part of that money which is flowing through it. That's very important to us. We started correcting MFI in 24, in Q1 24. It was at that time about 1,500 crores and brought it down to 500 crores. So we were very clear. We were seeing what others took a couple of quarters more to see, saying what is the science in that business. So you have to learn every day, correct? You have to learn every day. The beauty of credit business, you cannot drive your car with your eyes closed. You have to learn every day. And I think, and it's a very simple business. There's no glamour in it. You should be willing to roll up your sleeves and learn from it, and ensure that learning is getting institutionalized at a company level. I think that's very important to us. So we calibrated it, but I think we come from a world that you put a 3-year, 5-year plan, and then you have every year plan in place. So I think if you look at it, we might have a year of pause, but I think we are very confident of where we want to get to, which is 4+, around 4 return on asset handle by 28, and that's pretty much there. We run many stress situations. The advantage we have, because of the nature of diversification of a business, even if in one sector sees a little bit of headwinds, we can always dial up something else or dial down far more proactivity. So our agility, one, to pick up the nuances from the street, what is happening at a state level, at a district level, at a product level, then bringing that and acting on it makes it powerful for us. So I think we will hold true to what we set out to do over the next 2 years.
And Ashish ji, it would be fair to assume, first दोनों businesses which are our old, unique, very very USP to Northern kind of businesses, उनकी profitability जो है, someday you would want your retail business also to reach those 3-4% kind of.
Hang on. I think I'm gonna give it simple. I think some of this data is there on public domain, so we're happy to do. A credit solution business with a combination. Look at our NIMs. So NIMs are close to 9%, and you add another 110 basis point, which is a fee income. You have a loaded NIM of 10. Correct? You're seeing our OPEX is now at 3.5, but I think it'll range bound between 3.5 to 3.8, which is fair. You're sitting on a marginally elevated credit cost of 3%. In my mind, it's about, given that ambition is to take retail to about 60-70% of the balance sheet, 70% of balance sheet, you'll look at 2.25, anywhere between 2.5 to 2.8 over the next 2 to 3 years. So idea is to get to 4 return on assets. My credit solution business today, because of the fee franchise, the funds business, the placement, makes 3. And as we grow our funds business, because we are very passionate about it, we are right now in the process of raising for first climate dollar fund, where we are raising money, which is pretty good fund, climate dollar denominated based out of GIFT City. We have a large set of institutional investors, global multilaterals who's committed on it. We have to raise some more amount of money on it. The second, we want to launch, we're working towards launching in this coming quarter, India's first woman forward fund. Correct? Businesses which are more woman-led, led by women. I think, we need to do some of those things. I'm very passionate about it. We should do. And we've run the SME, the MSME, the Emerging Business Fund, where we fund mid-corporates, correct? We're launching the next version of that in the coming quarter. So there is a big focus in building that and doubling that up. That means the fee income should go up. That business, even today, on a time-tested basis, if we look at it, makes 3+ return on assets. And it generates the amount of knowledge which unparalleled to any other business. It enables Northern Arc to punch 3x more weight than the size of a balance sheet, if I may put it in a simple sense. The second, our digital business being there from 2018, it makes 4+ return on assets. So it's there. We know what we are doing, how we are doing, how we want to systematically scale this gradually. We're not very, you don't want to be very aggressive. In lending business, you have to be very measured in what you do. Systematically build this brick by brick by brick, partner by partner, and building our own capabilities and what we do. And that business is already there for last 8, 10, 12, 15 quarters. It makes that kind of return on assets. The secured lending business is now at close to 2.7, 2.8. You build branches, there's some OPEX. But to my mind, next year it will be 4+. The issue is the business we have to navigate and repurpose, which is only 550 crores on my book of 14,000 crores. It's a very small part, is the rural piece. And that's where we're adding more product capabilities and repurposing it. Actually, 2 years ago when we were doing that, we tested 10%. So we use test. I'm a big fan that you test, you validate, and then you scale. We also tested individually underwritten loans in a rural finance business. That pool has actually performed below around 4% credit cost, while the overall credit cost is 7.5. So we know how the new corrective scorecards needs to come into play. We know will be that business. Right now we're beginning to see some bit of growth, and we've also now levered the CGFMU guarantee scheme. So we'll build it out. That's the only part. Otherwise, if you look at out of 14,000 crores, 13,000 crores plus balance sheet is 3.5%. So that's the only piece what of it. And we build the fee franchise coming from funds. Our funds AUM is about 3,200. Our objective is to double this over the next 2 years. We have a meaningful performance. We have a track record. Nobody else has 9 years of track records in the performing credit space. We will continue to create new products, new investment avenues, both for domestic investors, HNIs, institutional investors to come in. We will continue to grow the placement and the structured finance business. And that will create the fee franchise strong for it to give us an incremental flip from on the NIMs. Like we did the NIM working on return on assets getting to 3. And I think as the balance sheet mixes also change, your NIM will expand even further. So adjusting for credit costs, I think in 8 quarters, you should be closer to 4 handle than 3 handle. And that's, I think we should be pretty confident of doing that.
That's good to know, Ashish ji, because you set a high bar for even the direct to retail, or the phygital retail, the branch employee. It's a tough business, so to say, and a big transition for you guys, because you were into a less employee heavy business to a more, but very good to know that. And I think, sir, this is where even there is a bit of market, the markets or the investing community, especially the secondary market or the listed market, I would say, it's this business where I think people still need a lot more understanding, because our stock price actually does not reflect our growth potential or ROI potential, both of them. Kya bolte ho, Varinder ji? At least
unfortunately, I kind of I'll agree with you. It does not. Look at the institution. Correct. You look at Northern Arc. We've been on a public market, at least debt listed now for more than 8-9 years. So that data is there on public domain. And I can say for first 12, 14, 15 years, we've been profitable quarter on quarter, year after year. So I don't think Northern Arc in any year has delivered any negative, correct? We've navigated in last 15 years, fair to say, 2 1 in 100 year events, correct? There was pandemic, there was demonetization, and we had large exposures even at that point in time, and multiple 1 in 10 year events we weathered. So you remain profitable quarter on quarter, remain profitable year on year. We are on a 3+ return, around 3 return on assets. I mean, that should be a good business. I need sessions like this for people to understand, because as a conventional public market investors looks at housing finance company, looks at number of unit, number of branches, multiply. Look at the power of what we have. It is a unique story, compellingly powerful, and a track record of 15 years, correct? Whether it's how many performing credit funds people are raising have 9-10 years of track record, not many. How many have an institutional placement business track record of 15 years? I think that's where it is. And deeply committed to the ecosystem, for ecosystem to work in parallel. A number of innovation we've done in securitization and in other products is unparalleled.
I agree,
Sir,
sir.
I think it is a combination of so many businesses, which is why sessions like what Varinder Bhai is doing, this the DHANDHA series. I think it will, markets will take time, but
We have lending business, simple. We have
Yeah.
two business: credit solution, lending.
No, I agree, sir. After listening to you, sorry, but this is not a stock, valuation, episode. But 0.9 book value, I really don't understand. Looking at the numbers, history, everything what you have done, in the company. But sir, size-wise, right now, as you said, we have 13,000-14,000 crores, AUM. If I take a long-term aspiration for the company, 5, 7, 10 years, do you think the company can have 50,000 crores AUM?
Yeah, of course.
How many years?
I think you look at India, credit growth is about 9 to 10%.
Yeah.
NBFC credit growth is about 15%.
Yeah.
Even today, which is this year, which is largely a bit of muted year from what trade markets are coming after, I think we are pretty confident of on a sustainable growth on a forward-looking basis around 22 to 25%. Obviously, there are years you will grow 30%. There are years you'll grow by 22, 24%. And, at this stage, if you're able to grow 2.5 times to 3 times of the GDP growth, and that's where it is. And I think the 3 sectors we've chosen are probably the most underserved sectors. And given our domain knowledge, expertise, understanding, time-tested risk model, I think we are pretty confident of getting there. So idea is saying, will you double in next 2 to 3 years? The answer is yes. Will you continue to compoundingly grow at 25% over the next 5-7 years? The answer is pretty much yes.
So, Digant bhai, एक बार हम लोग discuss कर रहे थे that beyond one size, it becomes difficult for any NBFC to grow.
correct.
So I ask you also the same thing for Northern Arc, because you have been bullish, I've been bullish. Will you think that, say, once they cross 20,000 crores or 25,000 crores, it will become maybe difficult for them to have that 20 to 25% growth rate?
So वरिंदर भाई ऐसा था कि इनका जो ओरिजिनल बिजनेस है, द co-lend, द क्रेडिट सॉल्यूशंस बिजनेस, ऐसा लगता है कि वहां पे मे बी 10,000 crores would have been the glass ceiling, so to say, and फिर growth rate slow हो जाती. But see, from there they have started the digital lending business. From there now, they have started a direct retail lending business. So I think they have built in 2 more optionalities के जो वो NBFC to NBFC lending वाला business है, वो may be slow हो जाता. But they have built 2 more optionalities, and I think the digital credit वाला जो growth है वो अभी भी 20% plus चल रहा है, and I think it has a lot of years to go. Direct to retail, I think they are so small, 3,000 crores in SME, 1,000 crores say we come in the rural lending. I think these are huge markets. I think the limitations will only be of how well they can scale up the infra, control the risk, and grow. Is it right, Ashish ji? Limitation is internal; it is not external for you guys.
No. Actually, if you look at it, and I want to little challenge you. Correct. Today, Bajaj runs 26, 27 product lines. Correct. Now, Northern Arc, if I asked you 7 sectors, correct? In 7 sectors, we've deployed about 2.2 trillion INR of credit. I said I have 55 million time series of loan performance data, which is like having a bureau record, a bureau equivalent, correct? So I've seen rural, I've seen vehicle, I've seen affordable housing, I've seen performance in agri supply chain, I've seen performance in consumer, I've seen performance in MSME, I've seen performance in solar and all of this around climate. I can add this product line as I go about. Every day I am learning from that pool. I think the question is, you can have any strategy. I continue to say, continue to strengthen what you have, grow what you are growing, and continue to reimagine your capabilities, skill set, what you need to do. Correct? It's about execution, and I think we've demonstrated. If you pull out what was a document in 21 in public domain to when we went public in 24, you will score us anywhere between 9.5 to 9.9 on performance, correct? Now, and so I think we've demonstrated the resilience both in the past and the ability to learn and bring that learning into action. I think we're pretty confident of what we set out to do. We have a great talent in the company. It joins us at the hip when we bring purpose to life. I think that's the power of Northern Arc, and you continue to use the knowledge to work. So I think we are confident. An expansion of product line is not the answer, but I think in the segment, like you rightfully said, there's enough meat. And the way to look at credit solution business is not to look from balance sheet, is to look at it as a flow rate.
Exactly.
Correct? If the India credit grow, will your credit solution business flow? And 3 years ago when I came in, we launched first emerging business fund. The idea was saying, what can you do beyond financial services? Right. So we now have tested it. The second performing credit fund we are launching now, which is going to be 1,500 plus 500 so far. So that means we continue to expand in that areas, which adds to the accretive value of building a strong fee franchise also.
Sir, एक stupid सा question है sir मेरे पास, Digant भाई, sorry, we all agree कि हाँ भी, they've done well, cheap stock and all, growth आएगा 20-25%. Sir, one of the founder members of the company, Dwara Holding, has been selling the stock. Okay, so I just fail to understand, यार सब अच्छा है तो वो क्यों बेच रहे हैं? Any
Dwara, in a sense, or IFMR was the original promoter. What is IFMR thesis? IFMR thesis or Dwara Holding thesis is to incubate multiple new businesses and bring that entire impact financing enabling of businesses into play. And I think it's fair for them when they find the right time, right opportunities, this is the currency they should use. But rest of the other shareholders are pretty much tight, whether it is Leapfrog, whether it's Affirma, whether it's shareholders, they're all together. And Dwara now owns less than 4%. So maybe they must be doing something for liquidity. I didn't track it, but I think they believe in the purpose and look at what they've created. Look at the impact. 120 million people have been positively impacted and touched by Northern Arc. So I think we must respect them for what they've done and what they've created.
No, 1,000%, sir. I was just wondering, maybe market is worried about the supply issue from Dwara Holding, and that is why, all the things are
happening. Now it's 3%, sir. It's
so
about 3.5% if my numbers are right.
No more selling from them, sir? Or what?
Sorry?
No more selling from them at all? Or?
I don't think so. But if they might do a small tranche just for liquidity. I think that's otherwise no.
So just last question from my side. The previous question I had asked about the technology.
Yeah.
So monetization का कुछ plan है technology का?
We currently have some institutions who are using it. Now it has two components, correct? And Digant, in a sense, picked it up. Is also to do with risk management, saying how deep you want to be, correct? Like spoke about exposure at sector, at product, at geography. That's the way we also look at risk at an obligor level, servicing risk at an obligor level, concentration of business at an obligor level. So we have banks who are using our platform for on lending. It is very powerful. Early days, we now have 2 or 3 clients. There are 2 or 3 more clients who are going live with it. And that's a good thing for us. Yeah, we will continue to add, and that'll add to the fee income. That's why I kept on alluding to the
Right.
fee franchise. So you have funds, you have placement, and you have some technology and data.
So isn't this kind of a little bit ironic because this is one of our edges, the technology, and we are outsourcing this to another company or whatever?
Okay, let's just no. I'm not outsourcing it to anyone.
No, not
The people.
exactly outsourcing, but giving the rights to use.
Yeah. So technology is like connecting pipe.
Hmm.
What you underwrite from that pipe is a function of your risk appetite and the risk adjusted return you want to make. Now, I've invest money in what was core to my business. If I'm able to create more platforms and more revenue from it, we are perfectly fine with it.
All
Uh,
right.
our risk parameters remain the same, but to address the need, it's like a placement business, correct? It's no different. Why should I place 15,000 crores of asset with other institutional investor? Can I take it? No, I like to take so much and balance. For me to generate the risk adjusted return, I have to give it to someone else. That's exactly the same thing.
Got
We
it.
build this, we build this for doing what we do, and we will continue to do so. It is actually, it is the most product agnostic customer centric platform. You can push a personal loan, you can push a housing loan, you can push a commercial loan, push a loan against property, push a loan for taking a vehicle finance. You can do all of it. Five of us on this call can decide to select very different cohorts of profile. It is so agile. It's built in a way that it allows people to select and apply principles. Now, those principles are unique to their own company of what risk they want.
No.
I think we're fine. We're happy to. It's like AWS example I took in case
Sir,
of.
when you meet a lot of investors, what is the kind of thing you have to really make them explain of understanding Northern Arc? Okay, like like as per you, what do you think the market is missing in terms to understand the business of the company, not stock?
I think two things to my mind. One between credit solution and what we do in a lending sense. At some point in time, may have become more complicated for people to do, and people confuse that with wholesale lending. It is not. I'm giving you $100 against that 120 rupees of pools of loan on which Northern Arc has selected that pool using Northern Arc's and companies' agreed risk policy. We monitor the performance of that pool. And every quarter, if I think out of that 120, two of them are not doing good, I get them to replace it. So I think they tend to sometimes confuse it with wholesale. It is end of the day, what we call it as an intermediate retail business. That's where it is. And I think at some point in time, now that we have coverage, took us coverage because number of stuff, the bankers took time to release the coverage. We now have coverage from ISEC and DAM, and we'll have some more coverage in the coming quarters. I think we are pretty confident. We're a very high quality business, and we know that market will assign an appropriate value as we go along the journey.
No, no,
It is
on 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 this, I will say one thing, Varinder bhai and Ashish ji, that we run a high yield bond portfolio at GreenEdge. At least one third of the companies which are there are 19 companies in NBFCs in our portfolio. One third of them have been introduced to the market by Northern Arc. So like being and then probably we help Northern Arc generate some of that fee income which Ashish ji is talking about, and our clients obviously enjoy the high yields which and no defaults which the papers which Northern Arc get to the market. So ये थोड़ा complicated business है, जैसे आशीष जी बोले ना कि हम PFC REC ये सब होलसेल लेंडिंग होता है कि एक बार आप दे दो और फिर वापस 5 साल 7 साल आता नहीं है, बट नॉर्दर्न आर्क इज रियली नॉट दैट. So ठीक है, I think markets will slowly start understanding it. We have been working on this high yield bond portfolio for a very long time, so we understand it. But I think Varinder bhai आपके session से भी I think more and more people will start understanding this. कि this is
I don't honestly, sir. I don't feel only happy, but very proud also to be a shareholder of Northern Arc Capital. Okay, like the kind of like if I hear Mukesh Mani sir, he was only using word AI. I think in the last 1 hour, you are only using the word risk.
no, we use a lot of AI and machine learning, by the way, in our risk scorecards. Yeah.
Yeah. Sir, I always ask this question because it's a time when people are worried about or thinking about NBFC sector or a cycle. Do you think the worst is over for the NBFC as a sector? You have different domains, so you cannot be completely that NBFC. But as per you, as per your learning, do you think that the last 5 years of struggle, especially in the microfinance, is it over? Is it about to get over?
No. I think the microfinance struggle, they experience it first. They are a monoline industry addressing at the bottom of the lower end of the pyramid. That got highlighted in Q2, if my memory serves me right, last year. I think we are seeing, because we see sizable amount of data from our pipes, that the new book quality, what I call par zero accretion, people, if you lend money to 100, how many of them are not paying, is now in line with what it was in late 23 and 24. So I think the new book is looking better. The part of the bad book is getting washed off. So maybe this quarter more for some of them. But I think the new book and the growth with now GST and other stuff, you should see some bit of a consumption-led growth in the coming quarters should start coming back. The new book across for most of the industry, we get access to a lot of data, and what we get to see is in line with the performance it was in 23, 24. So I think that means the new quality of book will hold. Obviously, some part of that business, look at it, that business is not isolated to one MFI alone. There are also some unsecured business loans, some unsecured personal loans, and all of that is there. I think a lot of that new book correction which has been done should start reflecting, auguring well from the coming quarters onward.
Sir, जब cycle turn होता है, and Digant bhai, you can also answer this, okay? When the cycle turns, do you think that that will be sustainable for the next 3-5 years, or again it could be cyclical? Because now we are seeing everything happening good in the Indian economy. आपने GST बोला, rate cuts हुए, सब कुछ हुए. Can we envisage that this cycle, whenever it turns 1 quarter or 2 quarters, 3-5 साल cycle चलेगा ये?
I don't know. I'll say whatever I know about. कि जैसे see cycle वरिंदर भाई कितना लंबा चलता है depends on what the players do. So microfinance में जैसे हमने देखा 23-24 there was a lot of excess lending, and which is why the cycle 2 साल में खत्म हो गया. And we built some over average and it came down. तो if the players are more disciplined, the cycle lasts longer. जैसे हम CV finance में देख रहे हैं कि 3 साल से अच्छा cycle चल रहा है. And even now cycle is not going so bad. So I think it depends on that, but at least at 18 months in unsecured lending, the cycle remains good. 18 months के बाद you have to see how much more new players come, how aggressive they become. जैसे आशीष जी रिस्क की बात करते हैं, हर NBFC रिस्क की बात नहीं करता है. And if there are careless lenders, the cycle really abruptly ends. So Ashish ji, over to you.
No, I think I said a lot of times saying efficient, scalable, and responsible. I think those are the most important tenets of what you want to do, and you need to grow. The growth is not difficult, correct? You want a responsible growth because end of the day, when the money comes back to you, lend again. That's where you will make money. I think that's where it is. We now in the MFI sector, I think the guardrails self-imposed by all of the MFI institutions should help, correct? And that's making it slightly difficult because approval rates are down to about 50-55%. The supply of money getting squeezed a little bit, and that's why you will see a lot of intervention coming in there. My sense is, I think we are broadly coming off the stress period, and whatever washout should happen this quarter, next quarter, but at an industry level, not for us. I think the new book quality is genuinely better. To me, if we follow and we learn from it, I think the journey could be even much longer than 4 or 5 years.
Lovely. Sir, one last message. We are running out of time, okay? Which you would want the investors who are watching this, to make from Northern Arc? Anything you want that they should remember about Northern Arc, that this is the most important thing about the company?
Oh, India is largely a credit staff market, correct? Less than 20% of people have access, 25% of individuals have access to formal credit. Less than 50% of small businesses have access to formal credit. Northern Arc is at the center, is the Sutradhaar who's enabling that money, building fee, creating lending solutions, participating lending directly. So if there is one company, if India needs to grow and continues to grow at 6.5-7%, Northern Arc should outperform. the industry in what we do, and continuously build competitive moats, which we have demonstrated: funds business, placement business, bonds business, technology businesses will become accretive to everything we do, and continue to learn and grow from where we are. I think we are in a very unique spot. You need to spend that minute to learn and appreciate what we do, and then take your decision wisely.
Lovely. Any risk, sir, which you tell your team to be careful about? Internal risk, not external risk. Okay, कि दुनिया में क्या होता है, but internally, do you see any risk?
The only risk which is important is, are you learning enough, and are you bringing that learning into action? Like I said, in this conversation, we would have underwritten at least 1,000 loans. Is our AI tools, is the machine learning from it, and are we taking corrective action to ensure we're able to do what we do in a responsible manner?
Lovely, sir. That's all from my end. Digant bhai, Aazeb bhai, if you have anything, or sir, if you have anything to ask from us.
No, thank you very much. Sorry, Digant and
No, thank you, sir. Thank you so very much for your time.
thank you. Nice talking to you. Thank you for this.
Everyone, लास्ट में मैं एक ही चीज कहूंगा, इफ आई थिंक देयर विल बी थाउजेंड्स ऑफ रिटेल इन्वेस्टर्स वाचिंग दिस, आप लोग बैंक फिक्स्ड डिपॉजिट में पैसा डालते हो, इफ यू स्टार्ट लर्निंग अबाउट हाई यील्ड बॉन्ड्स, you will really learn about the Northern Arcs, the credit solutions business very easily. That is my very simple
Altifi, ALTIFI.
Multiply is their platform where you will get some of these high yield bonds. So
Thank you.
that's it.
Thank you all. Thank you, sir,
Thank
for
you.
a very lovely.
Thank you. Thank you.
Thank you, Ji. Bye.